the concept of the gaps is fairly simple, and it's very correlated with the supply and demand zones. And when we have a supply, it's usually created with liquidity gap when price will rally very aggressively from the level where supply is created. For example, right here on the oil 5-minute time frame, you can see that we have this up candle, with a big sell-off, which broke the market structure. So we have our supply zone, and the second thing we have here is the liquidity gap. What the liquidity gap is just simply there was just lot of selling in this level, and price just created some sort of imbalance, okay, and these things, for price to remain in some sort of normal behavior, or some sort of organic behavior, which these liquid markets should be, then these should get filled. And as you can see, we have two liquidity gaps actually on oil on a 5-minute time frame, and sometimes the gaps will fill immediately, sometimes it will take a few minutes, sometimes it can take days or weeks, especially, and I will show you all these examples where we have different types of gaps. And I will start with the liquidity gaps. The second type of gap is a market gap, but like I said, big selling pressure happened here on a oil on a 5-minute time frame, and it took like 12 hours basically. And once price came back into the supply zone, we completely filled the gap. We filled this imbalance in the price, and we are looking for a short entries. We have a double top. We have a double top here, with a break, and then one more test and next break. So this is just a quick example on oil. And what do we have here? For example, is the Nasdaq. This is the 5-minute chart as well, and you can see that we have a next supply area right here. This was actually touching this 5-minute double top for the resting liquidity, but still we found the reversal. This was actually today, which I was watching today, like a few minutes ago. Big down candle, and price will seek to return to this level. This took just 3 hours, and we can find a short entry here, at least down to this demand zone, which caused this move higher. So there was, for example, today very nice short setup into this level. GBP USD 4-hour time frame. This, when price rallied from this level, then this even though we were kind of trying to fill this for 2 months basically, this never was completely filled, and price eventually at the end of the April came here. We have the demand right here. This was a tricky one because this would most likely get you stopped out, especially if you would enter at the close of this candle right here. But this is just one of the concepts of confluence that where we can draw our trend line, for example, okay, and we are waiting for a trend line break and retest. So just once again, you are trying to find as many confluence factors as you can. So but nonetheless, we fill the gap, then we kind of make this messy structure here. But once we broke the trend line and the price was ready to push higher, and also what we have here, we have a supply here on H4, okay, because this up candle led to this kind of last sell-off. We broke above it. We never really got a retest, at least on a H4. I'm sure if I would go to like 15-minute time frame real quick, yeah, we didn't get the retest here as well. But what we have here is our confirmation bar, okay, which you can long. And the more things I wanted to show here, the last thing basically about liquidity gaps, like I said, this is extremely simple concept. Just these, it's hard to miss these candles basically, and this is something which you will, you know, face sometimes when the price is really bullish, and especially the Bitcoin, which is, you know, as far from normal market behavior as it could be. You know, Bitcoin just doesn't really care basically about your technical analysis. I'm not saying it's not, you know, tradable. I know a lot of very great intraday crypto traders. My approach to cryptocurrencies is more on a higher time frame basis, where my kind of strategy works better. But you can see this is what one thing I heard from the para curve as well is the runaway gap. Basically, price will gap up, but the momentum is so strong that it will just simply continue in this parabolic move higher. So not every gap has to get filled, and but it still can get filled. Okay, so if this would be a normal market, for example, I would actually expect price to come back, retest this SR level and filling this gap. Okay, if this will happen in crypto, then this means that we are going back to 4K, for example. Okay, so these things can happen, and it won't be really unlikely to happen. So yeah, but there what I wanted to show you with this, that there doesn't have to be the immediate fill of the gap. And you know, sometimes it is, sometimes it really isn't, especially on lower time frames. I think I closed my Euro USD chart where I had you know, you can see this was you know, caused by the news, big bullish candle, market basically gapped up, and you know, we immediately fill the gap, and you know, this demand, as even this demand broke. So you can short this, for example, right here, and you know, this wouldn't really be the best short, but still, okay, you still would be able to get like 40 pips from it. So not the bet after all. And these are the liquidity gaps to kind of, you know, you can see we have next one right here, for example, quick sell off. This, you can't really miss these candles, okay, to be quite honest. And you will see them, you know, everywhere, and you know, at any time of the day. This big sell-off candle was just taking the order flow below these lows, you know, to do one more test of this SR level before, you know, pushing higher. And this gap got filled almost immediately. Okay, it's 15-minute chart, so it took a few hours. So these are the liquidity gaps. Nothing really too complicated about them. Okay, just when you have the demand and supply zones, they are usually starting with liquidity gaps, and like I said, these doesn't have to get filled immediately. It can take sometimes days, sometimes hours. It really depends. Okay, for example, on H4, on Euro USD right now, we have a liquidity gap from 22nd of March. Okay, so this is like already over 2 months, which and you know, this level wasn't filled before. And if I will show you another gap, which is right here, and I will show you the consolidation before the gap, which in this case I would really have to make a little bit bigger. You can see how we touch this, we fill the gap. So this is just next factor of the confluence, and if you would short this, then you know, in the next 4 hours you would make some money in the next 8 hours. Okay, because you know, price very aggressively sold off, because once again, in the supply zone there are resting sell orders. Okay, so you just want to connect these gaps, these liquidity gaps, with your supply and demand knowledge to, you know, kind of get most out of them. Because when there is a gap, kind of in like kind of middle of nowhere, then you know, it's just the runaway gap. You know, when there is not some real supply or demand there, it just means that price wants to run higher, and the gap has to be significant. Okay, just don't really think that this is the liquidity gap. Okay, because this is just not, you know, this candle is not just significant enough to be, but this candle is. You have a demand zone right here, which will price briefly test as support, but then we are breaking it, and you can short this here as resistance. So the second type of gaps, these are called, or I call them, the market gaps, and you will see them in FX. At least you will find them after market will open, okay, on the Sunday evening. If there is some, you know, big buying or selling, price tends to gap down, and I think that on the chart isn't really showing them as they should, but I am sure that there will be some gap here. Obviously I can't find any in FX, but how you know how these things usually work, they are usually on a very lower time frames. Let me actually find the example for you in a second. Okay, we have an example of the gap right here at the chart. As you can see, you know, this is the GBP USD, and you can see that market opened below the Friday close, so we have a gap, and I will just in a second actually show you how this, you know, whole setup played out. Just let me, you know, let me mark this out like this, and as you can see, you know, we took this is a little bit advanced chart. This is from the old academy anyway, but you can see that we have our gap right here. Price started a sell-off at the beginning of the week. We had this double top, so the order flow was resting below these lows right here. Price hit the 705 retracement of the Fibonacci level. This will be covered in the Fib lessons, and then this is your long entry on this broken base, because you can see that we have a up candle, you know, before the sell-off, which failed to act as resistance right here. You know, this didn't happen, acted as support here and a little bit here, but then once we took out the order flow, you can go long once again, and your target can be used the gap fill in this case. So the gaps tends to get filled. The second example of the gap is in the futures chart. Okay, this is the futures DAX contract, DAX futures contract, and you can see that at the beginning of this week, from Thursday to Friday, from 30 to 31st of May, market gapped down. Okay, so we had this big, you know, hole in the market, and since these usually tends to get filled, this took out you know, one trading day. We didn't fill that, but on Monday or on Tuesday of the next week, we immediately pushed higher and closed this gap right here. And there are, you know, more. These market gaps are usually seen in the futures contracts, or, you know, generally at the markets which close. Let me just delete this. This is this RSI from the previous lessons. You know, you will see the market gaps in the more in the markets where, you know, which close overnight. Okay, so since Forex is 24-hour market, the market gaps are not that common. But if you will take the DAX, for example, the futures contract on DAX, you can see how many gaps are here and how many of those are gonna get filled. They can get filled on the next day, like for example here, or they can get filled over time. Also, you know, you can see on a 15-minute time frame how big this is. Then we have a next gap right here, for example, which will get filled immediately, etc, etc. So if you are into trading futures, or if you are actually trading stocks as well, the stocks are the second market, which is more likely to fill the gaps. Then, you know, you will find more use in markets like these. You know, you can see, for example, we gap down, we fill the gap, we have next small gap here, and, you know, price is, you know, always, you know, there is a lot of gaps, for example here on Apple, because we are in a strong downtrend right now. But if price will you know, change the shift, if the market will shift and we will be in a bullish environment, these fill of these gaps are generally the great places you want to take profit. So this was for the gaps. Like I said, very quick video. This is nothing too complicated, and I will see you in the next one.